Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Well, happy Friday to everybody. The market, it pulled back, and it pulled back relatively hard today after the great uptrend that we had yesterday. Pulled back, and both all the indexes basically went down, and we're kind of like back where we started. But we're still have the potential of a follow through day. And we'll see what happens on Monday. Basically, only thing I'm in currently is Exxon Mobil. It sort of just kind of stayed pretty steady and really didn't do anything. Just kind of went, kind of just went sideways a little bit. End of the day at 99.19. I think that if we're going to see any uptrend in the market, it's going to probably be in the oil stocks. That's my guess. Just based on kind of what kind of what the situation is. But right now, it's just a good time to be kind of light and mostly in cash. Really interesting chart that I wanted to show you here. It is a chart of the dollar, and you would think with all this inflation, the dollar would be weak and all that stuff. Well, that's not true. Actually, the dollar has increased in value since the beginning of the year, almost 15%, which is absolutely amazing. Um, Part of the reason I think that, of course, that is because there's a lot of external debt in dollars. It's hard to get dollars, and therefore, it's kind of like a short squeeze on the dollar a little bit. Not that the U.S. economy is doing so great, but the demand for dollars to pay back loans that are denominated in dollars, especially from foreign sources, is sort of at an all-time high. So that's kind of what's creating a lot of this stagflation. If we look at the global inflation rates, at least we're not as bad as the UK. I mean, we have about an 8% rate here. I actually think it's higher than that. I think a lot of the government is masking the real inflation. So this is the reason we have stagflation. The value of the dollar is getting more, so people can afford from foreign sources to pay back less of it. Also, prices at home are getting higher, so real standards of livings, unfortunately, are going down. Now, if you look at the chart, Germany is also sort of in trouble, about even with the U.S. Now, they're gonna have a real problem with oil and gas and other things to heat people's homes, coal as well, this winter. So that's one of the reasons why I'm very bullish on the oil sector, and that's probably the only sector I'm really bullish on. But that gives you the kind of the idea. I don't believe this number for China. They're saying 2%. I think it's higher than that. France, I think that's about right. They have a lot of nuclear power, but I think overall we have stagflation, and that's a really bad thing because it robs the middle class pretty much of its wealth. So it's not a good thing. I did reduce my position in Exxon. This is just one of the portfolios that I have, but very significant one. I basically reduced my exposure from about 10% to about 5%. Still in the stock, but I'm going nowhere. I'm just trying to keep a toe in the water. If we get a follow through day, and I think that probably will happen. Hopefully next week. It'd be nice. We're still in the game. We could get a follow through day as soon as soon as Thursday of next week. If we can move up from here. But again, I don't know if that's going to happen or not. But I do think that we still can get a follow through day. By the way, if you're interested in taking a look at some of my watch list, and you're on YouTube, just go to the YouTube comments and click. I've put up the link. You can get that watch list basically for free. So just go there, and you'll be able to get the you'll be able to get um, you'll be able to get that list. All right. Well, let's get into some of the questions, and let's. Wait a minute. Stock of the day. We'll come back to that. So basically, let's take some questions here. You should be. You should be a stock before the hyperinflation one sets in. Yeah, well, absolutely. But the strange thing about this is that what we're seeing, of course, is that and I want to show you this to you. This is kind of an interesting chart. So let's go to the charts here for everybody on TikTok. Let's first of all look at the spider, and that kind of tells the tale here. Okay, this is the spider, which basically is the S&P 500 ETF, and it is it went all the way up to that 21-day moving average, and then it pulled back. And I think it's going to, I think, unfortunately, I think it was it's a short-term rally. Basically, as you can see, sort of, if we draw a line right along that 21-day line, that's kind of the trend that I think is going. We've kicked up to the top of that, so I think we're going to come down to about 350. Now, if we were to look at this spider with regards to the cash, and that's the GSY, you kind of get an idea of sort of where we're at. So I'm going to show you for the basically from the last quarter. That would be 7/1/2022. Going to kind of give you sort of a look see on that. Let's see if we can get that up for everybody here. Right. And what I'm doing here is I'm kind of showing you that what's going on relative to relative to the does it give me a stab there? Yeah, there we go. So this should show us. Yeah, there we go. Okay, this is what's going on with the with cash. As you can see, cash is pretty steady. It's moved down a little bit, and the S&P is definitely trended below that. But potentially, we can get to a point where if we look at the oil sector, and that's the XLY, and I'm sorry, XLE. Why did I get that wrong? You can see that that is making a move upwards, and so basically, if the market turns, and I do think it will, we'll get a fall through day, hopefully by Wednesday of next week. We want to start building that watch list going possibly into the oil stocks. The XLE is kind of showing us the difference between, and this is really just for this is really just since July. You can see cash relatively flat, of course, trending down a little bit. That's the inflation. The spider, which is the pretty much the overall market, that's down about 6%. But you'll notice that the XLE, which is essentially oil, is up about 12%. So we can make money in this market. I do think we're going to continue to see strength in the oil sector, and that's kind of what I'm looking at here right now. So if you watch this on a regular basis, and of course you're a member of the Action Trailers. By the way, you can do that super easy. Just go to the link and link on that first and last name and email address, and we'll get you on that list. But I do think we are going to be, it's going to be, I think the bull market for oil is going to continue, and so it's an interesting situation. All right, you won't see big changes till the second week of November. Yeah, that's probably true. I think that's probably true. I think the administration is desperately trying to hold down the price of crude oil, but I think that after the elections, that's likely to explode because we're seeing basically the Saudis cut back on oil production. We're also seeing, demand just is continuing to be there. And so I think after the second week of November, first of all, we're going to find out what the shape of the Congress is, but I have a feeling that we're going to see a spike in the price of oil. And that could be a very interesting event, for everyone. That's something I think that we have to get ready for, and we could possibly benefit from that. We could definitely possibly benefit from something like that. So let's look at the oil price. That's zero. W. There we go. I always get this wrong. There we go. There's the price of oil. Super. All right. So we'll look at let's take a look at the crude oil chart. And all I'm doing, I'm just shuffling the deck chairs on the Titanic here. Here we go. So here's the chart for West Texas Intermediate. Basically, it's the proxy for the oil price. And as you can see, we had been coming down. We're starting to spike. We're starting to move up higher. And I do think that once this happens, I think we're going to get some support right here at the 50-day line, and we think we could go higher. You notice how the relative strength line is starting to trend higher. This is the price of this is the price of oil. So I definitely think we're going to get some strength in the oil price probably after the election. That's my guess, and I think that we can. There's a fair number of stocks that we can kind of take a look at that we might be able to take advantage of. VLO is one of them. That's Valero. Also Occidental and possibly some of the big integrated oil companies like Chevron and Exxon also. But I definitely think we're going to see a spike in oil prices probably in about right after the you know um, right after the election. I'm afraid that's probably what's going to happen with the oil price. But that doesn't surprise. I don't think that surprised anybody. But I think we got to get ready for it. And hopefully, if you're on the watch list, we can do that. We can get ready together and see where it's going. So let's take some questions. Thank you so much. SGP, no, GPK, excuse me, GPK. Let's look at that. GPK. Taking a look there. Graphic Packaging and Holding. I'm not familiar with this company. Let's pull up the chart for it. There we go. So here's the chart for GPK. Let's see how that one looks. How that's set up here. All right. $20 stock. Not in a great area. Paper and paper products, not in a great area. It's basically trading right about at the 200-day line. 85 relative strength, which is good. But remember, the market has fallen overall, so the relative strength in many areas tends to be stronger than it usually is. Now, this has a 100% checklist, which is very, very good. And this is a very defensive name, but I just think I would be really careful buying in this sector, just because I do think there's definitely going to be increases in the sector. I mean, the paper sector definitely, depends a lot on raw lumber imports, and they're going to probably go up. But I would be a little bit concerned here, just because even though it's right at the 21-day line, the setup is very, very good. The big problem I have, of course, is with the sector, and I want to kind of chart this one against against the XLE, because to see what the performance has been as of late. And I think that this probably will tell a tale. This probably will tell a tale here. So let's switch on over to that XLE uh, and that chart. So if we look at both of these together, the graphic packaging holding and the oil sector, I think you'll definitely agree with me that the oil sector is stronger than the paper sector. So here's what I would do. I probably would not be buying this particular one, only because the sector is not as strong as we'd like to see it. I'd like to see a stronger I'd like to see stronger sector here. So I probably would not buy GPK. I don't think I would buy it at this level, just because it just right now I think we've got to be a little bit more concerned about what sector we're buying in, as well as as well as the other as well as some of the other things. So I would not be a buyer of GPK. And really, it's not that it's a good stock, but I don't think it's in a good area. That's sort of my take on it. I wouldn't be a buyer of this one based on the fact that the oil sector is doing better than this one right now. So I would look for possibly an oil stock that's set up, because I think that's going to be a better thing. Now, right now, of course, we can't really do anything because we haven't had a follow through day yet. But when we get a follow through day, that's when we want to be possibly Come on. It doesn't let me see the there we go. Let's see the new comments. All right. So let's take a look at, for Sam at Oxy and BOIL. Those are two good stocks. So let's uh, let's go on over to there. OXY, that's Occidental. Or, Um, Oxy, I do think is a good place to buy it. It's come back down to the 50-day line. I think it's going to get some support there, and I think it's going to go higher. And I think this one likely, if we get a follow through, this one should do quite well in the near future. It's got a 100% checklist and it's in the right sector of the economy. Right now, I'm just preferring the oil companies primarily because they are, they're basically leading. They're basically leading this chart. So if we were to compare that one against Boyle, let's see if we can do that. Um, that's going to give us that's going to kind of tell the tale here. So um, s- so compared against Boyle, you can see Oxy definitely is definitely is a better stock in terms of its performance over the last few months. And I do think that's going to continue based on the fact that I do think we're going to see a rise in the price of oil. So if we were looking for between these two, Oxy and Boyle, I think you got to look at Oxy very strong because I think that one is set up very very nicely to buy, and I think that's just basically the basically the way you should take a look at it. So definitely put that one on your watch list. Occidental. By the way, it is on my watch list. I want to show you. I do have a. I don't know if you can see it there, but if you want to get the free action trade alerts, go to um, bit.ly.dtf underscore subscribe. And if you want to get the free list of the watch list, just it's this one bit.ly underscore DTF underscore YT underscore sub. This one right here. And you can definitely get on that list. So that's a good list. I sort of have all of my watch list picks in there. So hopefully that will be of use to you. Let's go to the next question. Thank you. All right, let's look at Tesla from Christina. Tesla has become sort of a market perform stock, not really a stock that has, is really doing as well as we would like to see it. I don't think this is. I think it. If you're down more than 7% on this one, I really think that it's sort of time to possibly either cut back or get rid of it altogether because I think it's going to be a while before this one. I think it's very likely that it's very likely that it's going to be a while before this one comes back, and you just have to be aware of that. And even though I do like the stock, again, I did very well in the stock, so I always say, I think that every dog has its day, and I think the Tesla dog may. I mean, I think that ship probably is already sailed. So it was a little bit down. A little bit down to and then basically it looks like it's getting a little bit of support at about 204. But I think this one definitely could go lower, and I think significantly lower. So remember, if you're down more than if you're down more than 7%, it's really a good idea to possibly cut your losses because it could go much lower. It could go much lower. So it's really never a good idea to let a stock move against you more than about 7%. I mean, that really that's really kind of where you need to be. That's kind of where you need to be. Drawing your line in the sand. So I would, if you're down more than 7% on Tesla, I would consider at least selling part of it. And there you go. All right. So Jay is asking about the spider bottom. Yeah, exactly. I've been talking about this for a while, for the last few weeks. I do think that we are going to see a bottom on the spider, probably at about we're going to see it. We're going to see a bottom on the spider at about 320. That's my guess. Now, again, it seems like amazing that I would say that because today it's 357. But I definitely think we're going to see another leg down, and there's a lot of reasons for that. Let's kind of go to the weekly chart to get an idea, and let's see if I can make that happen. There we go. So if we go to the weekly chart on the spider, you'll notice that at about 320 we have the bottom of this consolidation. There we go. This consolidation, and that consolidation happened basically. That was the sort of the consolidation back after we this is the COVID low, and then we came up, and this was the consolidation where it started to make its move. I think we're likely to give back everything that we made since about July 2020 in this pull down in the market. So this is where I see this is the reason I see the bottom of this of the spider here at about 320. That's the reason why. And if we go back to the monthly chart, and this kind of gives us a even further out view. You can see, there you go. You can see this was a high here. This was a sort of a floor here, and I think we're going to give it all the way back. And then I think once we get to that point, and I think we're getting close. We probably, depending on what the Fed does, I think we're going to probably see a turnaround. Of course, this is the spider that I'm showing you right now. So that's kind of my take. That's sort of my take on it. Is that we're going to get to about a low of 320 of 320. Are you presenting? Yes, I am. I am. Hopefully, you can see this. Sometimes I get it all screwed up. All right. So this is Bob Doc. Always like your stuff. Would will be hard for stocks to rally as long as interest rates keep rising. Absolutely. Multiples keep getting reset lower. Absolutely. You're so right about this, Bob Doc. The interest rates have a lot to do with it. I do think that we're in, probably for at least another 3/4% rise, and maybe another one. Traditionally, long term, if we look at, way back to when interest rates really were invented, and that was basically when the Guild, I don't know if you're familiar with this, but the Bank of England about 400 years ago issued bonds, and they carried a 6% coupon. So that typically that typically is the benchmark rate for borrowing. I know that's hard to believe. We've been in this world where we've had 2 and 3%. So, I'm not saying that we're going to necessarily get all the way there, but that's sort of the norm. If we go back 400 years, is about 6%. So that is, I mean, I definitely think that we're going to see, the rates rise. I mean, we're at about 3 and 3/4 now. I think we're going to go up, 4 and a half, and once we get up there, then we're going to start. It's going to start slowing down because remember, every time they raise the rates on the Fed funds, of course, it costs more to borrow money, more for the U.S. to borrow money, and I think once this thing is over with, we're going to have about 40% of the entire taxes that are collected are going to be going to interest. So, go figure. But you're absolutely right about this, Doc. I definitely think it's going to be hard for the stocks to rally as long as the interest rates are going up. It's kind of like a basketball held underwater. It really is. So, definitely a good point that you're making. Can you pull up coal prices and comment? Absolutely. Thank you very much for that. This is another area of the market that I think. You know, that I think that we can, let's see if we can get that. Let's see if I've got coal. I'm just trying to think. I can't remember what this one is. I can do natural gas. Let's see. Of that. No, I don't think that's going to give me. Let me see if that gives me a index for that. Uh, hmm. No, let's see. Hopefully it'll give us some coal. High grade copper. Let's see. Consumer price index. No, unfortunately, I cannot get coal. I have to figure out how to get coal here for you. But I do have kind of a good proxy for that would be natural gas. No, not exactly a great proxy for it. But I want to look at the price of natural gas versus this is the price. This is the price of natural gas, and it's definitely in an upward trend as well. There we go. Back to that. This is I couldn't find coal. I could what I could do. Well, here's what I can do. I could probably give you a proxy for it, and that would be BTU, which is the price of which is a company which is obviously a company that you're probably familiar with, Peabody Coal. This tends to be one of the big ones, but this kind of gives you an idea, looking out at a monthly, what Peabody Coal is doing. And again, very much in very much in a situation where it's moving up. So let's compare the weeklies here. And I'm also going to compare this against natural gas and crude oil. Let's see. Gas and there. Not the greatest. It's hard to see on this. Not the greatest thing, unfortunately, but let's see if we can. So, unfortunately, I couldn't find the coal index, but this kind of gives us, what's going on with the various indexes. BT, of course, is not an index. It is Peabody Coal, but it's one of the biggest coal companies. So, definitely, it has outperformed both the relative price of crude and the relative price of natural gas. So, definitely, the coal sector still is a pretty good place to be in, the market. And I definitely think there's gonna be more demand for it, going forward just because, they cannot get the they just cannot get the coal that's gonna be necessary in Germany and places like that for the winter. So that's going to be a big deal. I've heard kind of through the grapevine some of my private equity friends have been buying smaller coal mines, believe it or not. And so they're sitting in a good place. I wish I was in that position. But you're right. I think coal is tremendously a good place to be. All right, Lisa, your your best bottom fishing pick. I want to buy and sell a covered call every week. Wow, boy, this is a tough one. I tell you what I like as a covered call. I think it may go lower though. Is Intel? I just think let's kind of look. I want to see if there's something out there that I can see for Intel. I think that Intel. I think it's a great company. I don't think it's going to go out of business, but they're going to be laying off lots of people, and they're kind of in a very dire situation. This is more of a short, I think, than a long, but this is the one I do like selling covered calls for because I think that now here's the thing about a covered call situation. You're gonna the underlying stock is gonna lose some money. So be careful here. I mean, this is the one that I kind of do like to do it. I would like to do it. I definitely think Intel is coming back, but I think for right now it's going to head lower. I mean, it's going to head even lower than this. So just this is one I kind of look at. I'm going to see if I can put something together, maybe in the letter to put out to people on either shorts or cover calls. I wouldn't short Intel here because it's lost so much of its value. The one I'm looking potentially to short. I haven't done it yet. Is Walmart. I know that sounds weird to everybody, but WMT. And why? Because I've did a little bit of sleuthing online and I'm going to sleuth it this week. And it seems as if Walmart has not sold um, has not a lot sold of a lot of its inventory, and you can see how this is on the weekly chart. You can see how it's moved up here a little bit. I definitely think, and we definitely have a blue dot special here. So, it is, it was a strong week for it, and the relative strength is moving up. But I think if this goes on, we could see this thing reverse, and we could see this thing reverse hard to the downside. You notice how it came up yesterday right to the 50-day moving average, but today it's moving down. I think that, and you see how flat this is. Okay, the bulls and the bears are duking it out here, and I do think that the bears are going to win, and I'm possibly looking to short it if it moves below the lower low, and where that is basically is right about here. So I'm potentially looking to short it um, if if it falls below about 128. Now it's at 130, so I'm a little bit leery about shorting it here. But if it pulls up a little bit uh, and then starts to move lower, I may short this one. So that's just a kind of an FYI for everybody out there. All right, let's take a look. Oh, here we go. Kathy Woods question. Kathy Woods, send letters, J Pal. you know, I know that I you know this is always the thing. Um, yeah, thanks for this, Sam. This is an interest. This is very interesting. Um, you know, I know that Kathy Powell. You see, this is what's so important. Let's look at ARK. Uh, and this is the ARK. I'm sorry, ARKK. Excuse me, that's ARKK because that's the ETF. Did I get that right? Yeah, there we go. ARK Innovation. All right. So this, this of course is the problem. This of course is the problem. I mean, obviously, Kathy Woods would like it if ARK wasn't so beat up on, But the fact of the matter is, Powell has to raise the interest rates, and the reason he has to is because he has to cut inflation, and that's how you cut inflation. I'm old enough to remember when Volcker did this back under Carter, and it was awful. I mean, we had the same kind of situation. We had a weak president, and that was Carter, sort of like Biden. Biden's a weak president. Inflation got out of control. Back then, the interest rates went all the way up to 21%. And I remember this very, very well because I was a newly minted realtor and I couldn't sell anything. No wonder I couldn't sell anything. Anyways, that's what got me out of the business. But I do think that the interest rates are going to continue to go up. It will eventually break the back of inflation, but it could go a lot higher. So don't think that this is one of the reasons why I think you got to concentrate on stocks that are going to benefit from high inflation, and that's going to be primarily the oil sector, and not something not something like Tesla or ARK, for instance. So I think you got to be really careful. And this is a very good thing that you put up here, Sam. I really appreciate it because but I think we're going to continue to see higher interest rates, unfortunately. Leverage ETFs. All right. Well, let's look at some leverage ETFs. And you've got some definitely good ones. So let's compare some uh, leveraged ETFs like the SQQQ, and let's SQQQ. Let's see, and all right. Also, I'm just going to put these up here. Um, SPXS. Yeah, there we go. DRV. See if I put DRV in. DRV. Yeah. I don't want too many of these in there. S. Let's put the S down. That looks good. And one more in here. LABD. I don't know what's on that. Oh, look at that. Interesting. Okay. So this is going to kind of give us a look. See, I'm going to do it just for this last quarter from 7/1/2022. So I'm going to set that and move on over to that. Now I didn't get all of these in here, but I think this is a very good question. So hopefully you can see what I've got here on the screen. Okay, so basically the DRV has definitely been the one that's been the winner. SDOW, it's doing pretty good. LABD, not so much, and then the SQQQ. So let's concentrate on DRV. That one looks better. Let's kind of see where it's at. Yeah, look at that. Very nice move. And this is the real estate. Yeah, okay, makes total sense. Makes a heck of a lot of sense because um, and let's pull it over. Let's pull this one. This is the DRV, and this one was the one that was outperforming. And this is the real estate bear, which I definitely think you're right. This is probably the one to focus on. Um, Very nice call here. This is the bear 3x bear, and real estate's going to have problems. There's no question. DRV may be a very good antidote to this because real estate, we're going to get at least another 3/4 point interest rate raise, and it's gonna affect the real estate market. So that's a very good call. And I think of those ones that you put out there, I think that's probably going to be our best deal. All right. Okay, this is probably the last question. When do you think the bull market starts? Whoa. If I knew that, I wish I knew that. I do think though we're going to get a follow through day. I do think we're going to get a follow through day. Probably. Um, I'm hoping we'll get a follow through day next week. Now that'll be a false start, I believe. I don't think that the bull market is going to start probably until and probably till after the elections, and probably I'm looking in late November, early December, and I think that the market will start to capitulate then. But it's really and it's really anybody's guess at this point. So thank you very very much for everything. Let's see if we can get I think that's the last one. And okay, American mood will change after. uh Okay. Uh, it's getting stronger. Don't this guy say anything? All right, Tesla. Okay. Um, okay, good. Well, good. If you're not already a member, of course, of the Action Trade Alerts, please do so. Very easy to get. Very easy to like it. So please like the show, and that helps us get out to a lot of people. And get that like. There we go. So please like and subscribe to the show. That would be fantastic. Also, if you're not already a member of the Action Trade Alert, super easy to do. If you're looking on TikTok, just go to the just go to the link, click on the link, and first and last name and email address, and we'll get you all set up on that. It's free, and I've also put a link in the comments on the YouTube feed at youtube.com/Dallas Trading Floor. Well, I'll be back on Monday, everybody, and I hope everyone has a great weekend. I know I'm going to probably have a pretty nice weekend. The weather is finally getting cool and nice here in Dallas, definitely like that. And I will see you at 5 o'clock, 5 p.m. on Monday. Happy trading.